Hey traders, Raghee here, and the one thing I think a lot of us have on our mind today is gold. Is this the move that we've been waiting for? It's certainly a 2.5 times daily price movement range, so uh, definitely out of the norm. If the ruler that I'm holding up to the market is the 68% probability for price movement looking back the last 6 months, and that's when I talk about historical price movement ranges, that's what I'm doing. So today, definitely outside the box. Now, here's the thing, and this is the analogy that I've kind of used all day. I love baseball as an analogy to trading and investing for that matter. I do not know what the pitcher, that's the market, is going to throw at me on any given day. I have no clue, right? It's kind of what I remind myself every day. I don't know what the market is going to do. I haven't known for 32 years. But it doesn't mean that I don't know what I'm going to do if the market reaches a certain price, right? Very different perspective. So from the 21 exponential, from the 34 EMA on the high, the close, and the low, I know that those four represent four types of pitches that I would like to connect with. So the further away the entry is from 1890, so a break of 1900, the further away we are from 1890, 1895, 1893, that area, the more my risk. So risk is my entry to my stop, whatever that distance is, times my contract size, whatever my number of contracts are, times the point value, right? That's risk. So clearly risk from up here is far greater than risk from, say, down here. And then we have sort of the areas in the middle here and here, which, to a certain degree should be more affordable for most folks. Like for some folks, this aggro area here doesn't work. This moderate area in here, much better. Conservative, I mean, look, this is right up against the point of validity. So just on the other side of a break is, you're done. The trade is over. The trend is broken. So think about that. Now, the other thing to think about is whether or not we might get a minor low. Now, if we happen to get a minor low, and let's assume we're going to get one. Let's assume that we are going to get perhaps another blue grab candle that may go a little bit lower than today. Maybe we get a candle that looks something like that, right? This could be the beginning of a minor low. So I would look for this as a potential beginning of a minor low, right? So this would be the area. So we exhausted up here, and that's, by the way, that's a minor high. Again, you know this after. There's a trade that's associated with it, but we can talk about that another time. But I am looking for a potential minor low. And then that would mean that we would launch back higher above the 34 exponential on the high and plot a green grab candle. And that would be this market resuming the trend that is still, gang, intact. This is still very much a double green. Now, the other thing I was talking about with the traders in the chat room today was, what if we treat this like we were intraday trading it? What if we treated this like it was a day trade? What if we were looking for an intraday reversal? So there's a number of patterns that I tend to like, and one of them is waiting for a low, letting that low give me a high. We get a low at a high retracement, and then we take out the resistance of not only the high, which would be right in here, but ideally we also take out the resistance of the 34 exponential moving average on the high. This is what I call a wave reversal. This is a wave reversal right in here. And within it, it's basically got a cute little Dow pattern called an ABC or a 1, 2, 3. So within that pattern, this wave reversal, I've got this 1, 2, 3 pattern. So I'll usually confirm the break of the 34 period exponential moving average on the high with a CCI. So that's another way to do that. So this is where I'd put my day trading hat on and say, all right, which one of these is giving me a nice clear? Now, there's a pattern, there's a prerequisite to what's a 1, 2, 3. There's a way it should look ideally. So this was a really nice one, and this was one actually that ended up happening live when I was in the options room actually. But we already had this trade set up with our zone starting at 1933 all the way down to 1900. So we're already looking at this. X marks the spot. We were already looking for that as sort of our bullseye to our move to the upside from a moderate level. All right, so I think gold's on everyone's mind. That's how I'm playing, and I hope these nuances give you a couple other things to think about to sort of tighten up the timing, tighten up the levels, and just get better entries on these trades. I'll see you in the next update.